I'm Jay Taylor. I'm the editor of Jay Taylor's Gold Energy and Tech Stocks, and I'm here at the Metals Investor Forum. It's in Vancouver, September 29th, 2018, and I'm very pleased to be with David Wolfin, the president and CEO of Coral Gold Corp. Thanks for joining me, Dave.
Thanks, Jay.
Coral Gold has about 50 million shares outstanding, selling about 35 cents, and it's gives it a market cap of about 17 or 18 million dollars. You got 19 million in the bank. So the stock is actually selling it under cash, and then, if that isn't ridiculous, you've got some royalties that are extremely exciting, although I don't think the market is paying any attention to the royalties. They could care less right now, but they're going to care, and they could care fairly quickly, I believe, once your partner, Barrick, starts, not your partner, actually, you sold your property to Barrick, and now you have a royalty, a very exciting royalty, very exciting property. Tell us a little bit about that royalty agreement that you have with Barrick, and also maybe you might just talk a little bit about changing from an exploration company to a royalty company.
Sure. So last year we sold the Robertson project to them. We kept a sliding scale royalty. It starts at 1% at $1,200, and it goes up a quarter point every $200. Gold goes up to 2,000, and we get to 2.25%. Currently, we have about $19 million in. That's gone up from $18 million from the exercise of options and warrants. And they're working on the pre-feasibility studies, so no one knows what the value of the royalty is until next year when that pre-feas comes out. Then I expect our share price to improve.
You say next year, David. How soon next year? Are we looking at early first half of the year? Or?
When we were negotiating through the deal, they felt they would start the pre-fees in Q1 this year, and they felt it would take 12 months. So that's Q1 2019, but there's always delays, so I'm saying Q2 or Q3. So probably within a year from now.
Right. So with so few shares outstanding, and let's back up a little bit in terms of the Robertson property. When your father developed it, he was the president and CEO of the company. I knew him well, and he was very kind to me as a younger person. He took me around and introduced me to people in Vancouver. But he really had a vision of this Robertson property, and Dr. Roberts, I guess, was one of the pioneers in the Carlin-style mineralization, and it's really what is really, I think, the long-term desire of Barrick. Talk to us a little bit about what Barrick sees there and why they were willing to pay you all that money to...
I think that, they're going to go after the deeper roots of the system. They did some drilling 2 years ago. We had a little option agreement with them, which expanded to this, where they hit 5 feet of an ounce at 2,000 feet. So it shows that there's gold at depth. That's similar depth to where Pipeline is compared to our property, because our property goes uphill. So we couldn't afford to go after those targets as a little company. So it made sense, rather than to continue to issue shares in a down market, put it in the rightful owners, which is Barrick, because they have the team and the expertise and the money to drill deep. So, we've been there for like 30 years. Originally, it was Andy Robertson who founded DACO. He was this prospector, and he was building this little leaching operation, and he ran out of cash. So he came to my father, and they formed this partnership. And later, we named the property after him. And at that time, my father said, well, who's the expert in the area? And he said, Dr. Roberts. So he met him, and it was at the time where they were on the second hole at Gold Strike, and American Barrick was a penny stock. And that's deposits what launched Barrick.
Absolutely.
And that's 30 miles away, and now we're partners with that company that knows the area better than anybody.
It's very interesting.
They have a 25-man exploration team that won the Thayer Lindsay Award a couple of years ago at PDAC for discovery. That was the gold rush, 15 million ounces. It's part of the land package right beside us.
Wonderful. What do you know about Barrick? They're doing some work now. You mentioned they're working on a feasibility study, which as early as Q1.
Pre-feasibility study, but they won't do a final because they can self-finance. So pre-feas is the same, and they've started on that. We've just announced they started 44 PQ holes. PQs is like the widest diameters for getting reserves.
Sure.
So all of that is being compiled data verification from us. They're not duplicating it all, but they're verifying it, so that I think has been done. So now it's a environmental impact statement, pre-feasibility study, plan of operation, all at the same time.
Wow.
And
so they're
how do
serious.
you do that? I mean, you have to be big with teams of
Yeah.
people to do that. Usually it's back to back. So they're serious.
They're
And
serious,
if you
yeah.
look at Pipeline, Cortez complex, it produces 1 million ounces of gold at $600 to $650 an ounce. It's their lowest cost operation.
Right. So and you're right along trend. You're to the
Yeah,
north.
they
you're to
surrounded the Robertson on all three sides. They engulfed it.
Yeah, you're at the northern end of that trend. Those two other major
Yep.
complexes, and just a couple of miles away from the mill.
Well, yeah,
Which is,
and they have a 10-mile conveyor system from Cortez to
Yeah.
Pipeline. We're closer. So if they wanted to build a 2 or 3 mile conveyor system, they could.
Yeah. Well, it definitely is a very exciting story. I think, also your father had done an economic study, I believe, and
Yeah.
you were involved with an open pit oxide or heap leach. Actually,
Yeah.
it wasn't all oxides, it was an open
So
pit
that was
project,
2.7 million.
2.7 million ounces.
But that didn't include the sulfides at depth, because we
Yeah.
had a resource estimate prior to that at 3.2 million.
So you, again, the economics of that was on a standalone basis.
Yeah.
You point out that here, Barrick has all the infrastructure. This is like icing on the cake for them.
It's low-hanging fruit.
Almost a low risk for them to go in and pay you $18 million to get this asset, which they can now.
They felt the only risk was timing of permitting and
Yeah,
delays
yeah.
and metal pricing.
Right.
And with the new administration in the United States, BLM has come out that said that they will take up to 12 months to review an EIS, where before the previous administration would take 2 to 3 years to
Right.
get a permit.
No, that's exactly right. So we have a lot to. I mean, for me, the 35 million shares outstanding. If things get exciting, they can get very exciting. I mean, it's not like I'm sorry, 50
million.
million shares outstanding. If you had, it's not 500 million shares. So the multiple
And
up,
reducing, because we're doing a normal course issuer bid.
you're buying some shares.
My goal is to never issue another share. So when the feasibility study comes out and we know the timeline to revenue, then we can adjust how we spend our money
Right,
accordingly.
right.
We can get more aggressive if we
Right.
want. Yeah.
So it's again, that share dilution is a killer in the junior mining space, and you guys have done a remarkable job. As you say, you took after your father. He was sort of Scotch or sort of tight and kept the share count down. He was smart.
He thought that they would run out of ore. He says, just wait, and then eventually a bidding war would start. And they kept finding more ore. He says, Dad, we can't do that. We got to sell it to them. He always told me cash is king and pigs
Yeah.
get slaughtered. So I felt a smaller piece of a bit, operating company is better.
Right,
So,
right.
And I think when the feasibility study comes out, there's going to be large royalty companies really looking at the company
Right.
as an acquisition because they're yield driven.
Right.
They pay dividends. They have to
They
replace
have to
them.
keep, exactly. So Royal Gold has got its start there on the pipeline, I believe it was,
20
right?
years ago,
And they're the biggest royalty company in the world,
Yeah.
and they know you.
the CEO called me the day after we closed the deal to congratulate me and said if we ever want to monetize the royalty, to think of them. We can't sell the royalty on its own because Barrick has a ROFR, right of refusal. So if anyone wants that royalty, they got to buy the company.
That's
And
interesting.
my holdings are aligned with the shareholders.
Yeah,
We
that's
control
important.
30%. I personally am the largest shareholder. I have about 12%, and my mother has about 10,
Yeah.
and the rest is all the insiders.
Insiders.
Yep.
Remarkable story. With a couple of minutes we have left yet, you can talk to us about some other properties right in that same area. You have some other properties.
Yep.
Those are more greenfield, I think, but you're doing some work on them, David, or?
Well, we were permitting them, getting them ready, but then metal prices were getting weaker, and the board just said, let's just wait till next year.
Sure.
So we've got the Norma Sass, which is just to the west of Pipeline and Gold Acres. We've got the JDN, which is adjoining Barrick's Hilltop deposit. It's about 15 miles away. They've got 3 million ounces of gold there. They're not doing much. It's just a development project for rainy day for when they need it. And we also have the Eagle claims, which are between Robertson and Fire Creek, which is now Hecla, I believe.
Yeah.
So they're well located. They've got gold showings on them and have good potential for the future.
All right. Well, it's all a very, very interesting story, David, and we'll be watching for that pre-feasibility study and watching you buy shares back, I
Yes.
suppose.
Yes.
Very good.
Reducing the shares.
Reducing the shares.
Everyone else is issuing. We're
Yeah,
reducing.
Excellent. Good work, David. Thank you so much for joining me
Thank
today.
you.
All right.
My
All the
pleasure.
best.